Welcome, ladies and gentlemen, to another episode of Real Estate Insights. I'm your host, Jarett Richards, and today we have a fantastic show lined up for you. In the world of real estate, it's not just about finding the perfect property, but also understanding the financial aspect as well. And that's why we brought a very special guest, Rhonda, who's an expert in the field of mortgages. And with the career spanning over many years, she has helped countless of families and individuals turn home ownership goals into reality. And whether you're a first-time home buyer, a seasoned investor, or just looking to better understand the mortgage landscape, you're in for a treat. So without further ado, before I go ahead and hit you with 6 questions, can you go ahead and give everyone a little bit about who you are and what you do?
Yep. My name is Rhonda Hummel, and I'm with Prosperity Home Mortgage, and I've been in the business for longer than I would like to admit. I've seen a lot of cyclical markets, rates, up, down, foreclosures, short sales, and, we're just in another market where rates are increasing very rapidly, and I think that's sort of affecting the real estate market and the qualified buyers that, the number of buyers that can qualify at these rates in such a short period of time.
All right, so let's go ahead and jump into today's first question. What is the current average interest rate for a 30-year fixed rate mortgage?
So we have 2 types. We have, they're all conventional. So we have conforming for Orange County, and we also have jumbo for Orange County. And, conforming is more expensive than jumbo, believe it or not. It's like we're on an inverted yield. So if your loan is below $977,000, it's about 7.25%.
Okay.
And that is at 0 points. And then for a jumbo rate for Orange County at $977 and over would be 7.5%.
Okay. And what is a key difference between a fixed rate and an adjustable rate mortgage in ARM?
So adjustable rate mortgages was an alternative when rates were, 10%, right? So they are tied to a specific indice, and they're fixed initially for 7, 10 are the most popular, and then after the 7-year or the 10-year, they will adjust once a year, tied to a specific index with a life cap. And right now, 30-year fixed is a cheaper rate than an ARM, so they're not very popular right now. There are programs that come in and out of the market just to help spur some of the activity on the purchase side. But right now, 30-year fixed is probably your best bet.
And what's a life cap for those who don't know?
Usually 5% over your start rate. So if their rates are around 7.25, 7.5, like a 30-year fixed, you're going to be 5% over that. So 5% over 7.5 would be 12.5.
Awesome. All right, so the next question that we have is, how does the mortgage pre-approval process work, and why is it important?
So I always like to inform people, and especially all the buyers or potential buyers that I speak with, there's pre-qualifications, there's pre-approvals, and then there's a buyer's advantage. And the pre-qual is you and I having a conversation, and you're in the market to buy a home, and you've never gone through the process before, and we have a conversation. Here's my income, here's my debt, and here's kind of what I want my payment to be, and I can back into your purchase price. You haven't provided any documentation, you haven't provided any bank statements for me to verify anything. So, I say, Jarett, potentially you could be pre-approved up to $750,000 with whatever you have saved down. So at that point, you're a pre-qualification. A pre-approval is where you've actually given me the documentation, and as a good lender, that's what I always recommend to my clients is provide the documentation, do the application, and let's make sure that your credit's in good shape and there's no surprises, so that you don't get your heart set on a home and then all of a sudden you don't qualify. And then the third one is the buyer's advantage, where you actually get full credit approval from an underwriter, and we're one of the only companies that do that. Obviously it costs us money to run credit on a buyer, and they go through the process and they get a certificate that's good for 60 days where it allows them to make an offer on a property without a loan contingency.
Okay, which is nice.
Well, it's a betterment to their offer, so if you've got a multiple offer situation, at least you have the ability to make it non-contingent on a loan.
Which is important.
Right.
And what would be some of the documents that people would need to provide?
Just tax returns, pay stubs, W-2s, fill out the application, let us pull credit, show us proof of the down payment.
Awesome.
Yeah.
All right. And speaking of down payments, what is the minimal down payment required for buying a house? So let's say this is a first-time home buyer. What would be the minimal down payment required for them?
So if they didn't have the 5% down, the minimum they could put down would be 3.5% and obtain an FHA loan. So FHA loans go a little bit higher in debt to income ratio and does have the lesser down payment, but they also have a FHA funding fee,
Okay.
which is financed on top of their loan amount. So,
And what's a funding fee?
So the mortgage insurance premium funding fee on FHA is about 1 3/4%.
Okay.
It changes with the Federal Housing Administration. They set those fees, and what they do is they let you finance it on top of what you're putting down. If you're putting down the minimum 3.5%, then you would finance 1 3/4% more on top of that.
Gotcha. Alrighty. And can someone buy a house now and then get a lower rate later on?
Yes. So, in the old days, they used to have prepayment penalties on loans, but those are long gone as of 2009.
Okay.
So there is no time limit in which someone would need to hold a loan. So if rates did drop as quickly as they've gone up in the last 2 years, certainly they would be a candidate for, a streamline refinance or even a refinance where they just refinance to a lower rate.
Awesome. And what would be your top 3 tips that you have for buyers looking to buy a house right now in this current market?
So the buyer's advantage, get pre-approved, don't get pre-qualified, don't worry about what the rate is, because if you don't have a property, it doesn't really matter what the rates do, right? So if you're under contract and you're locking in your rate, that's when it really matters. But just be as prepared as you can and, check in with your loan officer and make sure rates haven't gone up a whole 0.5%. Because in the last 6 weeks, we've seen that. So some of my, buyer's advantage were at the tippy top of, so maybe now they have to buy down their rate to keep that same qualification. So we keep an eye on that and keep track of those so that, we inform the agents, look, they need $25,000 less in price.
Yeah.
To make up that rate increase.
Awesome. And what would you recommend to someone that is looking to buy, they haven't spoken with a lender? Do you recommend that they just come and have a chat with you?
Absolutely.
Yeah.
Make an appointment. I'm happy to meet in person. I think in person for the first time someone, it's the biggest purchase of their life, right? And it's a big decision. So definitely get with a loan officer that's a seasoned loan officer and, go through the whole process, and that way you're really familiar, know what to expect, and they know what the process is. Like most people don't even have a clue.
Of course.
So.
And that's why we do these videos. Well, Rhonda, thank you so much for your time. If you guys have any questions regarding mortgage, don't hesitate to contact Rhonda. And of course, I'm here for all your real estate needs. Stay tuned for the next episode of Real Estate Insights.